for those of you who stopped by Sunday night on the webinar, we were talking about, for the majority of that webinar, we were discussing sentiment, right? We were going over a lot of sentiment signals that we follow, both on a short-term time horizon and, more importantly, on an intermediate-term time horizon. And basically, the discussion was in regards to how sellers have a tendency to get tired when sentiment looks the way it has, all right, over the last couple of days. And not only that, from my experience, I don't know if it's, buyers who are looking at the same thing who come in, or again, just the selling exhausts itself and buyers recognize that and they come in. But a lot of time when those sentiment signals line up, it doesn't have to happen that minute or that day, but in the not too distant future, there's a high probability that buyers are going to come in at least for a squeeze, all right? Because that sentiment is telling us that the bearish positioning out there, the fear out there, is offside, okay? It was overdone. And that a lot of times, especially in normal markets, okay, because this is not a normal market, not even close, but in normal market conditions, right, and you get your run-of-the-mill pullbacks, corrections, and stuff like that, sentiment can set up some incredible turning points, all right? So if you're in a cash position, you have the bullets to fire, and you're ready with your eyes open looking for those signs, you can catch the start of some really nice moves, okay? And and that's for a lot of us, especially those of you who are new to trading and you're not really fooling around on the short side much. That's what keeps you interested, and gets you in front of a screen, even if you're not really trading too much. That's what's going to keep you involved, so you can have your eyes open for, to see those signals. All right. So basically, and here's, I know a lot of you, for the most part, came by, but let me just show everybody what we're talking about so they know. Where is it here? I got to go to this and go. All right. This is an interesting one too. All right. So this is updated as of this morning. Okay. This is from Goldman Sachs. Let me see. Can I blow that up a bit so you guys can see it? Okay, so this is basically sentiment indicators that they send out to their clientele, okay? And the dark blue, current sentiment, where it is now, all right? The orange is a month ago, the light blue was 3 months ago, all right? And you can see here, out of all these indicators, right, these readings of sentiment, investor sentiment, trader sentiment they follow, you could see that pretty much you got a lot of sentiment here washed out, right? Even if they're not there, they're really close. And that's kind of almost exactly what it looked like as far as our indicators that we look at on a day-to-day basis. Here it is. I didn't have to go searching too far. All right, so this was all Sunday, if you remember. Okay, so what we wanted to see some sort of, there goes that. We wanted to see some signs of buying to come in and light the match, in simple English, okay? It doesn't have to be, quality buying. It doesn't have to be, call buying in the option market that screams somebody's trying to nail a bottom, okay? Because in these type of market conditions, we're at the least, even if it's not a signal of a major bottom, the squeezes off sell-offs like this could be quite profitable, right? So we just want to see signs that the trend is changing in the minds of the professional traders out there, all right? Again, in simple English, the players who know a lot more than you and I, okay, who have a lot more resources than you and I, okay? So what happens is yesterday we had a limit down a week open All right, but we saw some interesting signs. Okay, we didn't see any signs of anybody sticking out their neck in a major way and calling a bottom, but we did see selective names, high beta names. I give you Tesla was one of them. Google was another one. We saw positions, sweepers positioning for at the least a short-term squeeze. Okay, all the focus was in weeklies, right? So in other words, they weren't going out 3, 4, 5, 6 months and placing a large bet. They were sticking with this week's expiration and looking for the quick move now. All right. And again, in some interesting stuff out there. All right. Tesla, Google, I can't remember some of the other names, but we had a decent top bet list yesterday. All right. So that was the first sign to us that a squeeze may be in place sooner than later. All right. Then we come in today, we have a gap up, and the flow was pretty bullish throughout the morning. Into the afternoon, we ran into a roadblock like the early afternoon when flow died down. There was some protective blocks out there, which really don't mean too much. But it looked like buyers were running out of gas. All right. But another thing we were keeping an eye on, all right, and most of you who are members probably know we were looking at this, talking about this last week. We also have that pension rebalancing that's coming up here at the end of the quarter. Okay. And what that means, if I can explain it and put it into simple terms, when you have stocks and bonds so out of balance, all right, pensions at the end of the quarter need to rebalance, okay? So if you have stocks coming off of performance like they just had, awful, right, and bonds for the most part have been holding their own and outperforming, at the end of the quarter, what pensions are going to do, they're going to rebalance that. So they're going to take off some of their bond exposure and look to take advantage and increase their equity exposure at lower levels, okay? And a lot of times you see that into the close. You see that late afternoon, all right? If you follow it, you see it right in front of you. I think it was the last quarter. The last time we were looking for it, you had some crazy closes. Within the last 3 minutes, you had, the S&P just explode into the bell and into after hours, from red to green, crazy moves, okay, crazy moves. And the most important part of that, December 2018, for those of you who traded through that correction, that nailed the actual lows. I don't know if you guys remember that. There wasn't a buyer to be found during the Christmas holidays around there. That was the problem with that correction. Everybody was on holiday. Nobody was around. Light volume. You had no buyer. You had a buyer strike, liquidation, and the market cascaded lower, okay? And then because of the end of the year, end of the quarter rebalancing, the pension funds came in and had to take advantage and add to their equity exposure. And because of liquidity being so low and so light, it actually put in a bottom in price action. All right. So that's why it's important to follow these things, because this is not, these magical indicators, these, made up lines on a screen. This is what actually moves markets, right? When pensions are stepping in and they need to rebalance in a big way, it's quite important because they can move a market. So we were hearing about a week or two ago that Goldman had a note out again recently that their trading desk was talking about the pension rebalancing was going to run pretty heavy. They had an idea of that already going into this quarter. All right, so it was something we were looking at into the close today, and it was pretty evident, aside from the whole day being strong, it was fairly evident that took place late in the day. Some strength, even every little piece of weakness was bought up and closed at the highs into the bell. Okay, the point being, that's past tense. We need to continue to look for that, all right, the rest of the week. All right, no matter what the market may be doing up to that point, even better if they're selling throughout the day, all right, and the market soft going in to the last hour, let's say, okay, you want to keep an eye out. You know, if you're a member, you want to keep an eye on sweeper activity because you saw the type of sweeper activity that came in late today, right? We were seeing little spec action up until late today, and then all of a sudden, Apple's catching major sweeper activity. Boeing, right, caught some big orders. So it pays to pay attention when this is going on, no matter what the market conditions may be like, no matter what the market may be doing at that point in time that day, the last hour of the day, because if you see some legitimate sweeper activity coming in, they could be front running buying out of that pension camp, and you get some big moves. All right, so those of you who are traders especially, I would keep a close look, a serious look at that. All right, and going into the rest of the week now, what I'm most excited about, we got this vote, right, for the stimulus thing. They pushed it off. If it doesn't happen later tonight, probably going to happen tomorrow. All right, it's kind of a binary event type thing that we'd rather have out of the way. You never know. Even if they do get the votes, maybe they take some profit off the news, right? Buy the rumor, sell the news. If they don't get the votes, I could almost guarantee you this market would sell off quite rapidly. All right. So that's kind of something we don't want to be in the way of. Okay. We'd rather not because there's added risk. All right. So once we get that out of the way, and hopefully by tomorrow we will, now because of some signs of buying coming into this type of sentiment, we have to really keep a close eye on the flow and the sweeper activity, especially into weakness. All right. And I mentioned to a lot of you guys what I'm doing differently now, right, that I wasn't doing, you know, throughout this correction or even into the highs, right, earlier this year. I'm very interested in buying off sweeper activity further out in time, you know, sharp sweeper activity with time that I'm not looking for a move now in. All right. We haven't seen a whole lot of it. We're going to start to see more and more. I just think it's a timing thing. We really didn't have too much time through the process of this sell-off. But that's something I've become interested in again as far as position trading. I have an interest in building positions with time behind it. And I want to take advantage of the volatility out there and potential weakness of coronavirus headlines or whatever the case may be, and buy into that weakness. Okay, that's my game plan. All right, the problem up to now, even though this game plan, it just changed for me probably less than a week ago, but the problem has been there hasn't been a lot of sharp quality buying with time. Okay, the majority, the most aggressive type of flow out there, if any on the call side, because this market's been a mess, has been what we call spec action. We refer to it as spec action, meaning, you know, they'll come in and they'll get aggressive in SPY calls that expire tomorrow, okay, or weeklies that expire in a couple of days. They haven't been interested in sticking out their necks further out in time because of the uncertainty, right? Which makes sense, okay, makes sense. But now, as this market got hit over the head and sentiment has got, you know, washed out as much as it has, okay, from my experience, this is when these guys like to show up and really lean into, you know, quality names, not even quality. Sometimes they're under the radar names that we're not familiar with, but may have quality growth, quality fundamentals, you know what I mean, a solid business, and they go out and bet on the company. And that's the difference. That type of flow, they're placing a bet on the actual company, okay? Where when they bet on weeklies or even front month action, right? If they go out only a couple of weeks or a month, they're not making a bet on Microsoft, okay? They're either, In other words, if somebody comes in and buys Microsoft 2 weeks out, okay, even if it's aggressive, he's making a play on either the market or the sector or maybe news on the company, okay? He's not making a bet on the name. He's not making a bet that he sees value in Microsoft, because he wouldn't go out just a week or two if that was the case. All right? When they size up and they lean into bullish bets with time, okay, the likelihood is they're building a serious position in the name because they see value. They think it's undervalued, right? And for the most part, they're not just buying calls, right? The calls are just the cherry on top. They probably, in their fund, they probably are loading up in the equity, right? And then they look to take advantage of some leverage and stay close to the money, lay some wood, okay, and go out with some time and make a bet on calls, all right? So that's the type of action I like to look for when we get a pullback like this, okay? Because some of the, some of the biggest winners, some of the best names to own come out of these type of environments. But the problem is the timing aspect of it all, right? Like we've seen them, those of you who've been following Flow with me, they don't mind being early. They almost intend on being early because they want to build a nice sized position, right? So they're going to come in, they'll buy some, I keep talking about that SE because that was, one of my favorite names from the last correction. But they'll buy some SE, the market will shit the bed some more, excuse my French. SE will be lower, doesn't go anywhere. They add, they look for weakness. They want weakness to add to their position. And they will continue to add as long as the stock is down there, right? And then eventually you look, 3 months later, and all of a sudden, people are starting to talk about a name that we barely even knew existed at the time. So that's the beauty of these corrections. If you can sit tight, be patient, new leaders emerge, right? You've heard that before. New leaders emerge. It's not always the same batch of names all the time, the same identical names that come out and explode. You get your big names like a Salesforce and stuff like that in bull markets, that continue to do their thing. But there are always a new batch of names, a Roku, an SE, the list goes on and on. All right, so that's when you're in this type of environment, if you're a position trader, swing trader, that's what you want to focus on, okay? You're not taking advantage of this pullback, especially if you're in a cash position, if you're not focusing on that. Because let's be honest, as far as trading is concerned, all right, you can trade in any climate. You didn't need this type of pullback to trade. And to be honest, with volatility, implied vol, IV, and everything out there is juiced up as it is, this is not an easy market to quote unquote trade options, right? They rob you blind as far as premium is concerned. Yeah, exactly. So, my whole career, like I made in my business, every time you get a spike in volatility and the markets start to roll over from extreme bullish sentiment, okay, the best thing to do is sit tight, let things cool off, let sentiment get back into your favor, and then start picking your spots. What are you guys talking about? Boeing after hours? What is it? News? Or just trading higher? Is there any news on Boeing, or it's just trading higher? Oh, no news. All right. Anybody have any questions, especially anybody who's a member? Anybody have any questions on this sort of style of swing trading, position trading? Anybody? Okay, Nick, I know you're asking that because I'm the worst at it. And that was going to be my next whole topic. Holding on, right? Holding on to these potential winners is a whole other, technique or talent that I suck at. I'm not going to lie. Okay. I'm awful at it. I'm awful. I got a quick trigger. I'm pretty good at taking my profit, not getting greedy. You know what I mean? I'm pretty good at that. I like the spot I'm at when it comes to that. But riding winners out, I am awful. I am awful. I've tried a variety of things. You know, sometimes they work, sometimes they don't. The only thing, Nick, the only time, you know, I'm not going to say I never rode out a winner. You know, I've been in and sat through some nice winners, okay? But the only time it seems to happen for me is one or two things. Either I go out with more than enough time, you know what I mean? So the in-between profit, I'm not looking to take because I would have never went out so far if that was the case. All right, so I have ample time and I'm not going to get pissed off if I lose that short-term profit. That's A. Or B, sizing down. Sizing down to where, you know, the smaller profit is something that I'm not interested in. I was looking for that bigger reward type trade, right? I wanted to give that longer leash to, and I would have to size down to sit in it. But anytime, if you size up in a trade, okay, and you want to sit in that and let it go, that is one of the hardest things to do in this game. The hardest thing, because when you size up, you know, even a little pop, a little move, a little trade out of the name, you know, you got some decent profits there if you sized up. Okay. So one, you're going to be antsy to take that off the table, or you're going to see some news or turn on CNBC and somebody's talking about something bearish that gets you, you know, itchy to press that sell button and get out of it. Or, you know, you resist, you don't sell it, and it comes right back down to your entry. And like you know, and then you're cursing yourself out. You're like, you son of a gun, I should have took that off the table, right? And so it drives you nuts. I don't know about you, but it drives me nuts. It's like a lose-lose situation for me. So the only way that I can get myself to sit in a position and give it that leash is either I go far out enough to where, you know, that's my game plan and I'm stubborn and I'm sticking to it, or I size down, you know, or I size down. Good question. How far out? Like for me, I'll give you an example. Like right now in this type of market, all right, for those type of trades, I want to make sure I go out far enough, you know? So where we are now, let's say we call it April we're going into, right? I ideally would want to stay out at minimum towards the end of the summer on, okay? Doesn't mean I'm going to hold it that long. You know what I mean? Doesn't mean you have to hold it to expiration. 90% of these things you're not holding to expiration anyway, okay? But what it allows you to, it allows you the time to, one, not only be comfortable in the trade, but you can also take the approach that you can piece into it, into weakness, right? So you're not worried about picking that right spot in a market like this with the VIX at 60 and coronavirus all over the yard, all right? You don't mind being early. So it's almost like you have the intention on being early because you're going to look to add to it. Yeah, so that's the sort of frame of mind you want. But, you know, everybody's different. You know what I mean? So yours is the end of summer. Yeah, so that's a good guideline. Like, that's what I would stick to. So I agree with you, Todd. You know, that's something I would stick to. The end of summer on at the minimum. You know, so I'm looking for that time frame, and I want to see flow that lines up in it. Okay? But I know the best, see, again, it all comes from experience. The best type of action, all right, for those type of trades they always come with time behind it. They always come with time. You know, and I learned that early on in this business too. You know, the big boys, that's how they make their money. They don't actively flip around, you know. They buy stuff at a discount and they sit on it. You know, they sit. You know, that's where they make the big bucks. They're not looking to get in, make a bet like that in options and get out, you know, a month later. They're looking to, like I mentioned earlier, they're looking to utilize, take advantage of, you know, leverage in a sense, on top of the equity position they built in the name. You know, they're looking to take advantage of the option market, so they add some calls, dated calls. Sometimes they show up in leaps, you know, a couple of years out. But a lot of times it's 6 months out, you know, a year out, and that's where you see the size. And not only do you see the size, you see them continue to add, you know, continue to add. Yeah, and like, for example, Matthias, you're talking about the McDonald's flow that came in. You're not going to see that type of flow clean unless you get a correction or a crash like this. You know what I mean? You're not going to get that type of size in aggressive sweeper activity unless they get really excited about a name because it's come in so much. So that's the beauty of these corrections. You see the real way the big boys are playing out there. You know, not the little weekly cheap spec nonsense that we see more of. And don't get me wrong, that's good. You know, the spec flow we like because we like trading, right? But you know, you gotta be realistic. Now, I don't know, you know, each and every person's different out there. But I know, like, my big hits aren't coming off my quick trades. You know what I mean? That's not where my big hits come from. That's where I'm grinding it out, trying to make some money, right? More green than red, more winners than losers. I look at it, I told you guys, like betting ball games in a sense. You know, the stuff where you're going to make the best risk reward stuff is on your position trades that you're buying when you have sentiment on your side of quality flow and you give it some time. It can get boring, right? Because, you know, moving around is fun, obviously, but that's where, you know, you talk about any reputable person in this game, and they'll tell you all the time that's where the money's made. Isn't it? Who said that? I think Livermore, he blew his brains out, but wasn't it Jesse Livermore who said you make money from buying at the right time and sitting, or something to that effect? Wasn't it? Somebody said that. Right? That was Livermore. You make money, right, by sitting, yeah. So, you know, again, maybe it's not the best example. The guy blew his brains out, but you know what I mean. Right? You guys pretty know that. Right, sitting tight. Sitting tight when you're right. That's it. That's it. All right, so that's excuse me. That's what I'm focused on. And if you're interested in that style, right? If you're not in front of your screen all day long, you know, because you got to be quick right now out there. It's too quick, you know. So if you're not in front of the screen all day long, you shouldn't be fooling around with anything else but that. You know, anything else but that. You want to look for the best type of flow, the sharpest type of action. You know, I isolate them every day for you guys, right? Whether I'm playing them or not, I tell you what the best action is, both for spec action and for that type of trading. And, you know, you pick out names you like, you buy them and piece into them on weakness in markets like this. You know, if you could stick to just that, you're going to be a happy camper when it comes to your P&L. The problem is we're not all that disciplined to stick to that. Vinny, it never was thinking that it made big money for me. It always was my sitting tight. Yep. Yeah, and you know, it makes sense too, right? It makes sense. You know, you sit, you catch the trend, you catch the whole move. But again, you know, it's a little misleading because if you're buying up here, okay, and this is my opinion, if you're buying up here with sentiment on the complete opposite side, right? If you're buying into these highs and you're saying, okay, I'm going to go 9 months out on calls or whatever the case, and I'm going to sit because Jesse Livermore says to sit, you're not going to find much success, you know, over the long haul. You'll have some winners. You'll have a lot of losers because the riffraff is along with you. You know, you got to look to come in here, right? Expect to be early and give yourself enough time, right? Not all at one spot, all at one level. And that's where you get paid. You know, I mean, think about, again, the problem is holding them. Like Nick hit the nail on the head. The problem is sitting. But if you buy when you have intermediate sentiment on your side, you're going to be more than happy with your results, right? Remember 2018, the poll, even if you were early, you know, you had some big winners coming out of that. Oh, let me fix this. Hold on a second, because I think I screwed up these questions and I want to make sure. Right. And that's another thing. Bill makes a great point here. A lot of times my best position trades are the ones that I'm nervous about buying. You know what I mean? Anytime I'm excited about a position trade, I'm talking about, right? Something I'm giving enough time to. Anytime I get excited, it always seems like I get a pop out of it and then it rolls over, or the market rolls over and takes it down with it. But Bill's exactly right. A lot of times when you're scared, you're nervous to buy, and you're buying, especially when your signals, right, are telling you to do so. You're doing it right. You know, you're doing the right thing for that style, anyhow, for that style of trading. You know? All right, so who did I miss? Did I miss any questions? Because I had these questions backwards. Yeah, you need, you know what it is? It's not a system per se, but you need something that you have confidence in this game, that you have confidence in, you know? It's got to be something that you believe in that works more than it doesn't. If you don't have the confidence in it, then like Bill's pointing out, the likelihood is you're only going to follow it at the wrong times. You know, at the wrong times. So that's why, like I explained to you guys on Sunday, right? Like when intermediate sentiment is signaling what it's signaling, you know, that's my green light now to pay attention to the flow and to start looking at names that I want to build positions in and put away, okay? Prior to that, okay, because sentiment wasn't lined up and it was actually against me, you know, I had to find the discipline to not do that. You know, as good as it may look, these things, the market was going up every day. I had to continue to remind myself that, you know, sentiment is against me. It may look good now, but a month from now, markets could very easily roll over and things could look at its worst. So, you know, you got to have something, some sort of game plan, some sort of playbook that you have confidence in that works. And you can stick to it. Otherwise, you're not going to stick to it. You know, otherwise, you're not going to stick to it. When you jump around in this game, it's no good. All right, so let's talk about the market a little bit more now, okay? So we have sentiment. We have some signs at a flow that players are putting some money to work, right? If you ask me, you heard the Tepper interview on CNBC, right? That's kind of what we've been seeing in the flow. Okay, select names, they're doing some buying, but they haven't really got super aggressive, okay? When they get super aggressive, you can't miss it. You're going to see sweeper activity all over the yard, and you're going to see it in a variety of names and sectors, and you're going to see size all over the place, decent size anyway, okay? May not be McDonald's size and everything, but decent size. All right. And more importantly, you're going to see it come into weakness. Okay. You're not going to see the flow flip to weekly put sweepers, you're going to see buying into the pullback. And that's where the market, will open up, gap down, and they'll buy it up and turn it green. Then a couple days later, headline, algo sell the market off, buyer step in, support it, bring it right back. And we're going to see that out of the flow. All right, so that's the ultimate sign that they're playing aggressively. Okay, right now they're picking their spots. All right, we saw McDonald's catch a big bet. We saw ATVI catch a big bet. They're spread out. They're spread out. Selectively, that, believe it or not, that's probably their nibbling. All the missiles that we see is probably these guys nibbling. When they're tattooing things, that's when they're buying and they're excited. All right, so keep an eye on the flow now, more important than ever now that we see some signs that they're putting some money to work. I'm getting a lot of questions on this VXX today, okay? And, one order, first of all, one order means nothing in this game, all right? Absolutely nothing. But hold on a second. Let me show you guys. Okay, here we go. Just so you guys know what the hell I'm talking about here. All right, so this is what the flow looked like into the close here. All right. You see the difference now? Watch. Earlier on in the afternoon, okay? And this is all intraday. This is all momentum. You see it in the price action in momentum, okay? You see how, I'm going to go back to the morning here, right? You have some stretches, red, but you see these spurts of green that come in, right? That's where the market, the price action is building momentum off their buying, okay? So we get into the early afternoon, right? And then you see Snap, they were rolling some puts. There was another name too, they were rolling puts, I forgot which one. Whatever the case, there was some put buying, okay? And then the flow started to flip, see blocks, nonsense. Then all of a sudden sweepers start to come in and cheap, Juniper, Apache, all this stuff. And then the size started picking up late into the close here. Okay, Apple, $1 million sweep, another 740 here. So this is what you guys are asking about here, right? This VXX. Whoops. That's not good. What kind of drawing is that? I got to give it up. Well, there we go. All right. So two fairly large sweeps for April, same line, same buyer. All right. In the midst of solid bullish activity. Okay. So if that came in with put action around it in names, kind of like you remember we were talking about it on Sunday, that ETF call buying is all fine and dandy, but if it's not spilling over to names, it doesn't mean as much for me beyond that day. Okay. And that's sort of the same takeaway I have with this. If this would have translated into all of a sudden we start seeing SPY put sweepers, Apple put sweepers, the opposite of what we were seeing, and we see some syndicate coming in hammering the bearish side of things, I would be a lot more concerned than I am now. Okay. This I'm not going to get too concerned about. And on top of that, ironically, I just had a conversation with my buddy who follows volatility a lot more than I do. And I mentioned it to you guys. You remember? I think it was it Monday? It might have been yesterday I mentioned it to you guys. And what he was explaining to me was there's shenanigans in, hold on, let me get to these VIX products. Okay? This one in particular. And what they're doing, or what they have been doing, is shorting this and buying VXX calls or VIX calls. Something to that effect. Okay? I'm almost positive this is the one they're shorting. I don't think it was UVXY. I think it was this. This was severely mispriced. Before I even go on, did anybody hear anything like that? What I'm explaining here? hold on. Let me get I closed out the questions. Chat. Where's the chat? 1 second. Where'd the chat go? Maybe it's down here somewhere. Oh, here it is. Okay. Did anybody hear anything like that? All right. A couple of you are, right? So Jamna Ben is saying, yep, I did about this VIX. Right. The triple leveraged. This is triple. Is this triple or double? But this one in particular supposedly is out of whack. All right. I guess is the easy way to put it. And they're getting long VIX and shorting this, pair trades. All right. So that could be what's going on with the VXX call buying because, we didn't see any follow through anywhere else. It wasn't a group coming in and making a bearish directional bet on the market. Okay. Could it be protection, right? Somebody like Ackman is laying in long right now. Maybe he's like, you know what? I got a lot of long exposure here. We got a nice rally. Let's buy a couple $1 million of VXX calls and protect our ass. Right? So he's not betting on downside. He's protecting, his positions off a pretty solid up day. No. 50 Cent he doesn't fool around in this from my understanding. 50 Cent only plays in VIX. And the last word on 50 Cent is he didn't roll out his position. He took his money and he bought an island and he's sitting there right now. All right. So, a lot of times, guys, and that's the problem with bearish options flow. Okay. It can mean a lot of different things. Bearish option flow is at its best, okay, when it dominates the tape. Okay. In other words, that's why I look at call buying more than I pay attention to the put buying, because when they're not sweeping calls, that's bearish enough for me. I don't need to see put buying. If I see a lack of call buying, that's a sign of caution for me. All right. But bearish flow is at its best, has its strongest signal when they dominate the tape. When it's just put sweepers out there and there's no call buying and, nothing gets in the way. Because it's almost like, and they move out of each other's way. When you see, and those of you who have been members can vouch for me, when we're in a trading day where the flow is mixed, call buying, put buying, usually what does it equate to in price action? Chop, right? It's a choppy day. The market doesn't do anything, okay? When the flow is mixed like that. The momentum comes when sweepers are one-sided, right? So when sweepers are aggressive and there's a nice brisk pace of call buying, usually you see, almost always you see that strong momentum to the upside, right? When put sweepers grab the ball and you see nothing but put sweepers and no call buying, you see downward momentum, downward pressure in the markets. So that's where the signal is. One order can mean anything, because we never know for sure what that order is about. Unless you know these guys personally, you don't know what they're doing. We're looking for patterns of buying, whether it's call or put buying, and that's where the strongest signals come out of. All right, so I wouldn't make much out of this VXX action that came in, especially that there was call buying around. It doesn't mean we can't be down today, right? They don't get enough votes, the market is going to take a bath tomorrow. I can promise you that. All right, but it has nothing to do with that VXX. Could be protection into the vote. No, it looked like a clean buyer. We saw, and it's funny you mentioned that, Kevin, because you probably know, we've been seeing VXX put sweeper activity and call selling, right? That's what we saw recently. Yesterday, as a matter of fact, we saw VXX put sweeper activity. And then on Friday, we saw some call selling activity. You know, this was a buyer. This was a buyer. You know, I'm going to dig in a little after I get off the webinar. Maybe he's adjusting a position. But I would just, as of now, I would take it as the most protection into the vote, the stimulus vote, of somebody who may be a little too long for their liking. And that's the extent of it. All right, but we'll see how it plays out. All right, but that's, for me, that's the most important thing that I'm keeping an eye on now, even more so than the put action, because I can tell you one thing. If somebody's going to leg into any long exposure now, they're going to put on protection. You're nuts if you don't, okay? You got to put on some protection. It's dangerous and crazy out there, right? Especially with a virus that nobody in the finance world can map out. Nobody has a clue, right? It can take a course of its own. But what we want to pay attention to is we want to pay attention to the buy side, right? The call buying. If that continues, if they come in and they start picking up names similar to what they did today, you see how it spread out? Even yesterday, the flow was a little more broad than what we were seeing, right? More names to look at. You know, there were more names to look at, even if we're not playing them, even if we're not buying them, right? Like the Sedge caught some action today. The flow's starting to spread out, and what that's telling me is, at the least, we should see some stock picking start to materialize, okay? So, in other words, the market maybe chops around down here, right? Maybe this market as a whole just chops around, hangs around here, up and down with some volatility, but they threw the baby out with the bathwater and a lot of good names out there that have nothing to do with this economic shutdown for long. You know what I mean? In other words, you can't weigh Royal Caribbean Cruise Lines the same way you're going to weigh, you know, a software company, a security software company that might be at its best right now. So we're going to start to see stock picking in quality names, high growth names that they feel is at a tremendous discount. All right, another point I want to make before I forget, and I've been telling you guys this throughout the process, okay, because I still think it's the case, okay? I've been telling you for the last week plus that we're going to start to see sentiment flash green. The likelihood is we're going to start to see flow come in, okay? But here's the big hurdle. The news is going to get worse, right? The noise is going to get louder, all right? And I can tell you from being here in New York, all right, the way Cuomo sounded last night and this morning, like Armageddon was on the verge of hitting New York City, okay? That the escalation in contamination from this virus, it hasn't peaked out in New York yet. It's still to come, all right? But a lot of times these markets try to find bottoms at peak negativity. You know what I mean? At the worst point where news is at its worst, the most negative, that's where a lot of bottoms start to form. So my point being is, with sentiment the way it is right now, if we see call buying coming into that noise, we gotta, our responsibility, what we gotta do, and that's why we're planning for it, is to block out that noise and pay attention to the signals that matter. You know what I mean? If somebody's sweeping up $5 million of, you know, D-Dog or ZS, Zscaler, or, you know, any high growth name, and even though the news is a catastrophe, they're doing it for a reason, you know, because the market always prices in this stuff, guys. The market, look what this market did, okay? I'm telling you from 23 years experience, all right, and I've been through some corrections and bear markets, the speed of this crash has been remarkable. Without a squeeze, I've never seen something like this before. You know, for good reason, right? We see the news now. I mean, look what's going on. The whole entire globe is shut down. Okay, but the market was telling us that for weeks now. That's why this market was doing this. You know what I mean? That's why this market was selling off like this. Every rally didn't have a shot in the world, right? Every rally they slammed with sellers. And now we know why, right? Down here, now we know why. Here's where the global shutdown now is starting to manifest here. Okay? And the likelihood, like I said, the news is not going to get better from here, from this point. I don't see how. The news is going to get worse, but what usually happens is not even go, the market doesn't have to go higher through that news, but you're going to see sell-offs, buyers show up, and they hold it together. You know what I mean? They hold it together. And another reason for that is throughout this whole process, right? Throughout all of this vicious selling, a lot of people came out of stuff already. You look, right? All this selling, all this, the velocity in this sell-off, CTAs went from net all-in long exposure to now net short, just like that, okay? Hedge funds, same thing. Long to now basically net short. Everything. 401ks became 201ks, you're right. You know, you see the outflows, especially like bond funds. Oh my God, I can't even believe it when I look at it. You know, that's why sentiment, you know, is showing what it's showing. All right, so again, it's possible that I'm wasting my breath here, right? And there's another leg lower, right? Everything I'm talking about now, buyers crawl up into a hole for the next couple of weeks, and this market has another leg south. Of course, it's possible, all right? But what we're going to see, the likelihood is if that happens, we're not going to see any call buying. You know, we're not going to see any quality call buying because that's why. There's no one there buying it. And that's where bears look to take advantage, you know? The other thing too that, you know, which I can't understand how. If you can believe it, short interest throughout all of this was minimal. Okay, short interest, there was no shorting going on. I don't understand how that's even possible. The stuff I look at anyhow. And now all of a sudden, again, those of you who are members know that, oh, I posted it on my regular Twitter. You guys saw it. The shorts, net shorting, all of a sudden here, whoop, they're all in short. All right, so again, all the things we wanted to see, we're starting to see, okay? The last piece of confirmation for me, and then I get really excited. I probably become a little more aggressive in my swing account. In other words, I'm going to step on the gas to own stuff rather than do it methodically, is if our sharp hedgers step on the gas and get long. You know what I mean? If we see that, like that's the last piece of confirmation that the smart money is buying this, then that's when I'm going to open up a little bit more and get aggressive. You know, not get stupid, but I'm just going to step on the gas a little bit rather than be so methodical. You know? And let me see, do I have a chart to show you guys on that? Where it last left off? Let me see. Oh, wrong button. Oh, I don't have, because it was the weekend. I don't think I have a chart to show you guys. But I showed you guys over the weekend. That's the last thing I'm waiting on. Let me see, did I post anything on here by chance? You see the move in this thing? This was yesterday. Anybody roll the dice on this, even for a day? Pen? That was some move. They destroyed the stock. Nick, what are you saying here? I see a question I missed on you. Hold on. On the trade alert line that you get, and you get to the IV part, right? Is that 24 how much the order affected the IV? Yes. Yes, the plus. The plus is what it went up or down off the trade, Nick. The number before it is the implied vol, right? So you see this? This is what you're talking about? Yeah. See, so look at that IV, Nick, right? It's tough, man. You know, like I'm saying I could talk an easy game, even day trading, because, you know, I'm trading equity and I don't have to deal with this. You know, dealing with these implied vols, you know, you're going to have a juicy move to for it to be worth your while. Otherwise, here was the sweeper activity in Tesla. Okay, look, all weeklies, there was actually one May sweep at the end of the day. You know? But these, you know, if you were looking to take a shot, short-term trade, you know, this was nice action. For those of you who like to only trade these names, you know, that's what you want to look for. You know, again, they're not swing positions because who's calling my phone? I don't even know what phone that is. What phone is that ringing? I don't have a phone. What the hell is that phone? Where's that phone coming from? Oh, I don't have it here. Do I? Oh, it was over here. You know, these sharp edges and riffraff. It's Jules. I really don't. There's a landline in here. I must have maybe the fax machine that I used to have in here. Insiders buying. All right, so we're seeing some buying. That's good. Well, I had to tell you guys one more thing before I forget. I forgot it. Where do I get DSA data? The DSI is really expensive if you get it from the actual source. Not expensive. It's pricey to the point where you're probably going to not want to do it if you want it on your own. I can send you the link. Who am I talking to there? Do I know who that is? M. I just see an M as your name. But a lot of people get it from somebody who gets it, to be honest. But, you know, a lot of houses have it. That's why. And, you know, honestly, a lot of people don't really like it too much. Active traders, you know, they almost call it like a relative strength oscillator type thing because, you know, you get signals, oversold signals. It lines up with the DSI where, you know, single digits. But I follow it or everything else. Marvin, hold on. Let me think of the source. If you Google daily sentiment index, there's the one guy who pops up, and that's the one source who has it. It's his indicator. I think you got to buy it for the year, and I forgot the exact price, but it's not cheap. Not as cheap as you would think it is. But, you know, you get charts with it. You get a cool setup with it. Not the one I post. My boy just sends me that, the breakdown of it. You get some other stuff. Jake Bernstein, that's it. That's it, Marvin. That's his indicator. And, I mean, you know, I was a broker, so everybody in the advisor financial world all followed it. You know, it was like you didn't know anybody who didn't follow the daily sentiment index, you know, so it was really popular. Where do I get that COVID data from? I got the link for you, Ryan. Is this Ryan? Ryan, who I know? Who the fuck is calling my phone? Is this the Ryan I know, or is this a different Ryan? Oh, okay, cool. I'll send you the link. I'll give you the link. Somebody else just gave it to me, and I'll shoot it over to you. It's pretty cool, though, right? And accurate. I posted it on Twitter, I think last night for a couple who were asking. I think it was last night. But yeah, why don't you guys, whoever wants that link, just hit me up on my regular Twitter, Ryan, if you can. So I remember and I could just shoot it over to you that way. All right, he's talking about the coronavirus update. I have a good, no, Lotto, I have a good Hearst for Thinkorswim, not for, I haven't found a good Hearst for TradingView. Yeah. Let me know if you find one for TradingView. I haven't found one in ages. I've been looking for it. All right, so let me know if you ever find one for TradingView. Yes, Matthias, Sharpies, we actually, let me see if it's still up here. I'm going to repost it. Charlie and the gang, and I think it was Greg who did it. He put a write-up. I don't know where he put it. Did he put it over here? On all the slang I use. Here it is. Is this it? There it is. So if you go to wallstreetjesus.com, this right here, the Steam Room Tools strategy section, and all the terminology that I use, you know, what's a sweep, what we look for in sweeps, all that stuff, they're quick write-ups here. Here's the terminology. All right, so you can get an idea. But yeah, just very quickly, Sharpies, I refer to as the big shots who are making dents when they buy something. You know what I mean? That move markets. That's Sharpies. Sharp money, sharp paper. You'll hear that term in the option game a lot. Sharp paper for something that really, you know, clean size order that sticks out. You hear it in the gambling world, the sharp money, right? The people who are in the know placing bets. Yeah, so Sharpies, I use for a term for anybody who I think is sharp, right? So like commercial hedgers, I feel is sharp money. You know, the sweeper who swept McDonald's, you know, that's sharp money. So it's almost like a blanket term I use for people in the, you know, people in the know. Yeah, I trade, Alex, what I do is I'm an equity guy. I traded equities my whole career primarily. And believe it or not, I follow options flow, but traded primarily equities because for clients, I traded equities. You know, I never traded options for clients when I had clients. But what I've been doing now over the years, I like swing trading, position trading options, and I like actively trading equity, if that makes any sense. You know what I mean? So for like the short-term stuff, the intraday stuff, I like trading equity because I feel like I have more control over it. I can, you know, I don't need, in other words, what would bother me about short-term option trading, you get a move in the stock and you're losing premium. That would drive me nuts. You know, that used to drive me insane, especially like day trading. So like, for example, now where I'm willing to day trade anything that catches aggressive activity because I could stop myself out. A lot of times, you know, it pops off the action and then fizzles out. So I take a scratch trade. You know what I mean? Up or down a little bit of money. In the option game, not only are you losing before you even hit the buy button because of the spread a lot of times, but a stock could do nothing. If you're in weeklies, you're losing money, right? So a stock, you could be up on the equity, even though it's minimal, you could be up. But if you're playing the weeklies, you could take a little hickey. Yeah, that's why Alex, especially in this market, right? And lean hogs, right? That's what it's for. Lean hogs, Tim. You're right. When in this type of market, Alex, you got to be really selective, and you want, in other words, when you're making a short-term bet in weeklies, you want that risk reward to be quite favorable. You know what I mean? You want the potential to see a decent move. Otherwise, it's not worth it. You're not scalping options in this type of market with IVs junked up the way they are right now. They're insane. They're insane. Yeah, and that's the beauty of, when this market does finally bottom out, right? And we start to see that the VIX term structure start to flatten out and go the other way, and VIX comes in, it's a better time to play. You know what I mean? It's a better time to play actively for you option players. So that's why it's worth being patient. It's worth being selective and waiting for that time. I told you guys, the real winner that comes from out of this mess are the players who have chips left to take advantage when the dust settles. You know what I mean? Everybody's racking their brain, trying to pick a bottom, trying to catch the short with IV junked up out to wazoo. Everybody's driving themselves nuts over the volatility and the big swings, right? And, they're making some money, losing money. Eventually they get bitten in the ass, especially if they size up. And then what happens is the market bottoms out and starts to show some constructive signs, price action flow, and you're so screwed up, not only your pockets, monetarily wise, right? Not only money wise are you screwed up, but you're so screwed up psychologically that you don't even want to participate in the rally. And that's where all the money's made. That's where all the money's made. Because sentiment's still washed out, right? Calls is still cheap. People, or remember we talked about that. How long were we talking about that throughout this rally? Remember the non-believers? Every time the market rallied, this is a bear market rally. This is not a real rally. This is a bear market rally. And then we run into something like this right here. And they think we're going to new lows and another rally. And then this comes, we're going to new lows and another rally, right? And they, non-believers, they didn't believe until what happened up here. And why? Because the Fed forced them to believe, right? The Fed forced them into risk assets and they had no choice. They had to believe, and then they get caught. It's like clockwork. It's like clockwork. So now all that money that was in there forced into equities by the Fed. That's why they got such a bad taste in their mouth from about the Fed when you hear them talk. Because the Fed forced them into risk assets. They didn't want to get long. They haven't got long throughout all this. You think they want to get long up here? And then they have to get long. Not because they want to, they have to. And then they get caught in this. And now they're so pissed off and in such disarray, they start shorting here because the news looks so bad. You don't see a light at the end of the tunnel. So that's why I tell you guys, from my experience, okay, what usually happens, even if this market, even if SPX is going to 1,000, okay, even if it could be, okay, SPX could go test the 666 low for all I know, back in 08, okay? Even if that's the case, even if the market gods, that's in the cards right now, okay? What usually happens is they wear them out, the shorts. They'll keep this market here, they'll squeeze it to here, fill some gaps, you know what I mean? They'll chop it around, a little uptrend type of thingy. And what you'll see is all that sentiment we're looking at, that is extreme bearish starts to cross over neutral and all gets washed out. You know? So now it's not everybody bearish, everybody in puts, everybody all hedged out. That's not the case anymore. Okay? People start to feel a little better about things or not as bearish about things. And then what happens? If the market's going lower, woo, another leg down. You know, you see it all the time. Like 08, right? Everyone wants to compare it to 08 because we had nothing really close to this besides 08. I like doing this from time to time. I always scroll back and see like how things played out. But look at 08, okay? 08, you had some crazy, like 08, I don't even remember rallies in 08. That's how scary 08 was. But you see this, right? So you have, boom, new lows, bottom. Here's where everybody's all negative short, and you get this, right? Doesn't look like much because you know what followed, you know? Then lay down, then a little of this, then free fall, right? And even this with the credit thing, you know, the downside wasn't easy. But by this point here, this move from here, I don't even remember this, to tell you the truth. That's how much fear there was out there. I don't even remember this. Because I'm being honest with you, we were pulling money out of all our banks and brokerage accounts. I kid you not. That's how crazy that was. But I don't even remember this. Like people are like, oh, you could have made a ton of money on the short side. Yeah, if I had any money at any brokerage account to buy puts in. Why would you buy puts if you thought the whole economic system was about to blow? People were buying gold bars. I kid you not, they were buying gold, physical gold bars, because they think that's what was the only thing going to be left. That was 08. And what was different back then till now, Bernanke, you know, he ended up becoming a legend out of that mess. He was stubborn. He didn't do anything until this showed up. Until Lehman, put it this way, this tells everything. They let Lehman go under. You understand? Bear Stearns got bought out at whatever, $4, $5, whatever it was, and they let Lehman go under. Then they forced Merrill to get bought out. Merrill, oh, Bank of America. Wait, who bought Merrill? Bank of America. Bank of America bought Merrill, and then Bank of America was going under, and they had to bail them out. Now, can you picture that going on? And what do you're gonna put some decent money in a brokerage account and buy puts? Seriously? You're gonna put a nice wad of money in an account so you can short what? The bank that you have money with? Because you think they're going under? It was nuts, man. It was nuts. I'm telling you. People were losing homes, everything, John. Everything they owned was out the window, up in smoke. It was insanity. You know, it was insanity. But, you know, my point of the whole 08 story, you could see, I talk about it like, I always like talking about it. But even in 08, as bad as it was, when sentiment got to an extreme, there was always, you know, something like this to keep them in check, you know, get that sentiment back to like a neutral state before a leg lower. Always showed up. It always showed up. Yeah, so, and you know, you could check other corrections too. You know, they were nowhere near 08, obviously, but if you look back throughout all these other corrections, you know, very similar, very similar. So you see here, right? Whoop. What do you think sentiment was here? You think sentiment was not all bared up here after this? There wasn't a bull to be found there, okay? And you see, it wasn't like the market rallied, bounce up, down, break new lows. Uh-oh, that's Armageddon. Everybody all in short. End of the world's coming, and they got run over. All right, that was 2011. That was no can of corn either. That was a little craziness, 2011. That was over some stupid government shutdown and stuff. But that 2011 had some velocity behind it, you know. But all of them, you know, all of them. See, whoop, whoop. Yeah, this somebody's keep calling my phone like I'm going to answer it. I don't even know there's a phone in here, but they're going to keep calling it. You know, they're going to keep calling it. How thick-headed people out there. Here, see? Bears extreme here. And you see what they did here to soften it up? And then, look, right? The market had another leg lower in it, and then it did it. Oh, this was 2018. And this is where everything lit up. All right, guys. There you go. I took you through 2008 and all the years, too, while my phone rings in the background. Anybody else have anything to add? Any questions? Nothing good. All right, so hopefully we have quite a few, not quite a few. We have a good handful of names to talk about. But now more on these webinars, we're going to start focusing on individual names that may catch action, even if this market still is, you know, shaky and volatile. At least we'll still have some names we can start talking about just because sentiment's there. Gold, I really don't have an opinion on gold. You know, I really don't. Usually I don't like to play gold because it's anti-market, right? It's usually a bearish play on the market. But, you know, I could see gold going higher with the Fed doing what it's doing, even if the market turns. So, you know, it's tough. I don't know. It's tough. Incredible move here recently, right? Right back like that. You know, the only thing I would say about gold, and I'll leave it at this, is if we go into a liquidation phase where people got to sell everything because we have a credit issue, which the Fed is pretty much all gung-ho to avoid, gold is going to be sold. In 2008, people were hiding at gold, and then it got clobbered. LQD. Yeah, I know, Lotto, you're in that short, or we're in that short. Are you still in it? You closed it. Do you know liquid short or medium term? Oh, corporate bond ETF. Corporate? Isn't the corporate bond ETF? Oh, roll down. That's the best bet. You did the right thing there. You did the right thing there. What's a corporate bond ETF? Another one. This is the junk bond, right? Which is LQD. There was another one I thought I knew. High yield. Yeah, you got HQD. Let me see. I never heard of that. Ooh. HQD. So this is, what is this HQD? This is leveraged high yield? Wow. Oh no, this is NASDAQ, it says. Bataro NASDAQ, 2 times bear. Yeah, HYG. Maybe that's what he meant. I know HYG and JNK. And then Lotto, you know the emerging market one that we were seeing put action? Yeah, I don't know, Lotto. If I find one out, I'll let you know. If I find one, I'll let you know. Oh, that's what the Fed is buying. I got you. I'll ask. I'll ask around. If I find something, I'll let you know. If I find a ticker. JNUG, well, that's the JNUG is the leveraged gold miners, right? The gold miners had a nice snapback. See, I would wait for weakness. I wouldn't chase this move. personally. You know what I mean? I let it hang out a little bit before I chase, especially gold. Had a nice move. But you know, I'm not too. I'm not going to lie with you. I'm not too familiar. I don't trade gold and the miners. I'm not active in those things, so I'm not too familiar with them. You know, we see flow from time to time in it, but I don't really have a personal opinion on it. UUP, we've been seeing some buying. That, you know, the dollar's been strong as all hell. They bought the dip a little today again. Had quite the move. Yeah, I mean, maybe the dollar takes a breather here, you know, and those things can heat up. We'll see. There's so many balls, John, as you know, up in the air. You know what I mean? Of how shit may play out. It's only as I say, only the market gods know. It's so crazy right now. You know, so crazy. All I know is, yeah, and not only that, this virus thing, you know, let me tell you something. If it was just financial, if it was just credit and the Fed doing what they're doing right now, we would have bottomed already. No question about it. But because this is a virus thing and you got the whole world on lockdown, you know, Trump could say all he wants. You know, if this virus takes a turn for the worse, we don't think that's going to happen. But if it does, how long? You can't be on lockdown that long and function. VCIT, Lotto, somebody just mentioned. VCIT. Oh, that's intermediate term, right? Sneed, do you have any short term? Do you know any short term? Lotto, he just mentioned the symbol. This is VCIT for Vanguard, intermediate term. Kevin, yeah, you know what? VCSH. Kevin, that's something I wanted to ask too. I'm going to find out if there's a way so I can open it up so everybody can see it. Everybody can see what everyone's asking. I'll try to, if there's a way, I'll try to do for next time. No, in other words, I could see what everybody's saying here. Kevin wants to know if there's a way he could see what other people are saying. I guess that would be a chat, right? That would be too crazy. I think we had that on Sunday. It was a little hectic. Lotto, you know this one? VCSH? Oh, okay. I'll find out from them, Kevin. Thank you. That's the one, BKLN, yeah. That's the one we saw some put buying it. Oh, my God. Oh, my God. Leverage loans. You know, that's, you know, when you see stuff like this and these things, you know, things are dicey out there. Let me take one more question because Robin's got a good one. How do I tell good flow from bad flow in spec sweepers? What I like to see, Robin, personally, is I like to see buying in clusters or bands. In other words, one weekly call buyer could mean anything, and it's useless to me. So kind of like what I showed you in the Tesla, right? Okay, if this was just one order, I probably don't pay much attention to it. But because they came back and hit it several times, it's worth taking a look at if you're interested in the name. You know what I mean? If you're interested in the name. So that's how I would approach the short dated spec stuff. You know what I mean? If you're eyeing Tesla and you're waiting for sweeper activity and you see them come in and they hit Tesla 2, 3, 4 times, you know what I mean? And somebody's committed to it, that means somebody's making a play on it. You know, they still could be wrong, but at least you know there's a higher probability that somebody's placing a bet on it, as opposed to, you know, hedging a short or anything like that. So that's the difference. You know, for short term, when it comes to sweepers, the more the merrier. You know, so sweepers are momentum. They're a momentum indicator over the short term. The more you see, the stronger the momentum. What I did, I bought McDonald's, and then what I did is I rolled into a cheaper strike on that move. When was that? I lost all track of time here. A couple days ago, Paul. Last week, Friday. I'm still in Jan's. Friday. I was going to actually take it all off the table because it was a nice move, but I decided to roll and roll up. Roll up. That's the word I was looking for. Oh, you had the equity. Yeah. Well, they swung it around a little bit. It kind of went nowhere, but big price move, right? So look, you had the pop and then right back down here and then a pop again. You might get another opportunity, you know, Paul, you might get another opportunity. So, but that's why, Paul, that's why for the longer term stuff, I like options. You know, even though I'm an equity guy, I like options because some stocks, they, you know, in this market, they move around a lot for swings. And you can't put a stop loss because if you come into a limit down, your stop loss goes out the window. Oh, man. I day traded it, Ed, and I sold it right before that second leg, that nicer move, because the market was kind of getting tired. Jesus Christ. So I sold it. I bought it right off the sweep initially for a day trade, and I sold it into this, and I missed this. Yeah. We just mentioned it Friday. It caught some nice action. Did you buy it Friday or you bought it today, Ed? Oh, today. So yeah, the word is, from what I was told, they canceled out of a meeting. I don't know if there's any truth to it, but that's why I heard the heat came out of eventually. That they're a takeover target and they canceled out of the meeting. But boy, it caught fire off those sweeps today. You know, because Friday it caught like two nice sweeps and it really didn't even do much. But it was a different tape too Friday. And it was a different tape. 35 in the after hours, yeah. Maybe you get lucky with this thing. I'll root for you anyway. All right, guys, always a pleasure. Anybody who's new, go to wallstreetjesus.com. There's a lot of information there, even a free trial if you're interested. All right. Oops, what the hell did I do now? But anyway, go to wallstreetjesus.com. You can check us out. All right, you have any questions, you know to hit me up. For those of you looking for that coronavirus link, hit me up on Twitter and I'll send it over. Thanks, guys. Have a good night. Wash your hands.